It's the week ahead at XM.com. Thanks for joining us. We have a lot to discuss this upcoming week. We have non-farm payrolls and two central bank meetings, the ECB and the Bank of Canada, of course. I'm Cristina Marujos. Helping me unpack this very busy week ahead is our senior market analyst, Geraldo Pisuros. So, Geraldo, before we get into the upcoming week's events, I'd like to discuss the market reaction we saw after a U.S. trade court blocked Trump's tariffs. Do you think this decision might end the lingering uncertainty that's been prevailing in the markets lately?
Hello, Christina. Yes, trade court blocked Trump's tariffs from going into effect. They noted that he overstepped his authority. And as we've seen, this encouraged investors to buy stocks and the US dollar. However, the upbeat sentiment did not last for long, and the moves were reversed during the day yesterday on rumors that the president will most likely find a way to overturn the ruling, and also after a federal appeals court reinstated the most sweeping of Trump's tariffs. So I think that certainty will remain elevated. But in any case, following the deals with the UK and China, and also the ongoing talks between the US and more of its main trading partners, I believe that recession fears have been put to bed for now, and this allowed market participants to scale back further their rate cut bets. They are now penciling in 50 basis points worth of reductions by the end of the year, which is in line with the Fed's dot plot. Concerns about more persistent inflation by the Fed may have also been a reason for those expectations being scaled back.
Now, staying in the United States, non-farm payrolls are out on Friday, and so far, to be fair, the labor market has been quite resilient, thus making the Fed quite hesitant to cut rates. What do you think we'll see in the main numbers?
Yes, we do get the non-farm payrolls on Friday, but before that we also get the ISM manufacturing PMI and non-manufacturing PMI on Monday and Wednesday respectively. Non-farm payrolls have been beating expectations for 2 months now, and another solid print could corroborate the notion that the labor market remains healthy. However, with the Fed expressing concerns about inflation, I believe that average hourly earnings could attract greater interest than usual. Now, should wage growth remain elevated, well above 3%, now is at around 3.8%, investors may feel tempted to take off the table more basis points worth of rate cuts, especially if the ISM PMIs corroborate the S&P global PMIs and reveal that business activity is picking up steam. This could help the dollar rebound again and recover some more of its lost ground.
Now let's turn to the central bank front. The European Central Bank has been vocal about its support for further rate cuts. So do you think we'll see another one being delivered when it meets on Thursday?
At its latest meeting, the ECB cut interest rates by 25 basis points, as the uncertainty surrounding Trump's trade policy has increased concerns about the Eurozone's economic outlook. In the statement, it was noted that the adverse and volatile market response to the trade tensions was likely to have a tightening impact on financial conditions, and that the disinflation process is well on track. Remarks that kept the door wide open to more rate cuts. Now, since then, data showed that underlying inflation accelerated to 2.7% year on year from 2.4%, which combined with remarks by ECB policymakers that interest rates may be close to bottoming out, allowed investors to pencil in only 55 basis points worth of rate cuts by the end of the year. Now, for this meeting, a 25 basis points cut is nearly fully priced in, and thus a reduction on its own is unlikely to be a game changer for the euro. Investors and traders are likely to pay attention to the statement accompanying the decision, the updated macroeconomic projections, and President Lagarde's press conference. Now, a few days ago, Lagarde warned that although the European Union and the US are getting closer to some compromises through trade negotiations, the international trade environment will never be the same again. So, should the rate cut be accompanied by a dovish message, investors are likely to add to their rate cut bets, and the euro is likely to pull back.
I see. And finally, the Bank of Canada meets on Wednesday, and it's expected to keep rates unchanged due to sticky inflation. Could this offer the loonie some support?
Now, in April, when Bank of Canada officials last met, they decided to keep their hands off the rate cut button, ending a streak of 7 straight reductions and turning more cautious about the inflation outlook, as you said. Now, the CPI data for April revealed that Canadian inflation slowed to 1.7% from 2.3%, but this was due to the removal of the carbon tax that notably reduced energy prices. This is evident by the fact that the median and trade mean CPI metrics rose to a 13-month high. That's maybe why market participants are expecting policymakers to remain sidelined again at this gathering, and they are fully pricing in the next 25 basis points reduction to be delivered in September. So, for the loonie to extend its prevailing uptrend against the US dollar in the aftermath of course, the decision, Canadian officials may need to sound more concerned about the inflation outlook, something that may prompt investors to push back the timing of when they expect the next rate cut. So yes, I believe that we may have again concerns about the inflation outlook, and this could help the loonie gain some more ground.
I see. Haralambos, thanks so much. This was The Week Ahead at XM.com.